Morning, everybody. I hope you are doing well today. It's a beautiful morning, Saturday, September the 13th, and we are trying something new today, which is doing a webinar on a weekend. Generally speaking, we do this during the weekday, and I thought we'd give some people an opportunity to join in, on the weekend. It's a little bit more relaxed, the atmosphere, etc. So we're just gonna wait a minute or two, and then we're gonna get started as the people start trickling in. So thank you for your patience. Once again, Raza Khan from Qila Capital. Pleasure to meet you if we haven't met already. And thank you for joining. So we will start exactly in 90 seconds. Okay, and we will see you soon. Hey, everybody. Okay, we are going to start momentarily. Thank you for joining. Raza Khan here, Chief Investment Officer of Qila Capital. The purpose of us doing this webinar is to effectively just give you a little breakdown. First of all, get to know you, build a community, so people can put a face to the name and see what we have to say. And of course, tell you more about what's happening in the market and how our offering competes with within the marketplace. So the topic for today's conversation is the Qila Capital's Fortress Fund. It's an inside look. And what we're gonna do is we're gonna start off with a macroeconomic view, and then we're gonna zoom in and go into the microeconomics and talk about the product itself. Okay. So again, thank you for joining. I'm gonna kick it off momentarily. I'm gonna share my screen, and the agenda for the call is. Let me just share my screen and go from there. Okay, one moment. Okay, so the agenda for the conversation is we're going to do the presentation for roughly about 20 minutes. And we're going to talk about what's happening in the market right now, the multifamily mediocrity, how hospitality hotels compete against multifamily. And then we're going to focus in on the Aloft acquisition. We're going to talk a little bit more about the Aloft Hotel today than we did last time. And we're going to try to get everybody out of here within 25 minutes. Okay, that's the agenda. Before we start, I just want to let you know that we have a standard disclaimer here. This presentation and this offering is for accredited investors only. We are a company, a fund registered under the Rule 506C Regulation D exemption of the Securities Act of 1933, which means that we can only be soliciting this with accredited investors. So if you're not an accredited investor, please, we can't be talking to you. I'm sure at some point we'll have something for you, but not at the moment. All right. Moving things along. Who are we? We are Qila Capital. We are an asset management company based in San Antonio, Texas, and that's where I am right now. As you can see behind me, there's a beautiful ranch, the Qila Ranch, which is where our office is located, and our company. This is where we're based out of, in right outside of San Antonio, in a town called Bernie. So we are an asset management company with $100+ million in assets under management. which includes healthcare, real estate, healthcare practices, and then we have a division for hospitality, and also some other types of real estate and some ventures as well. So our mission is very straightforward. We want to be safeguarding your life's work always, and we want to be the fortress for wealth preservation for your capital. And we want to provide you a new paradigm, which is a conservative strategy. Our investments are very conservative, and you will see that in a moment. So here we go. So before we zoom into the offering itself, let's talk about what's happening right now in the marketplace and what makes this offering unique. So we are still coming out of what I call it a pandemic hangover. The rates are high. As you know, the interest rates are high, yet the economy is still booming. The S&P is hitting an all-time high. And a lot of different asset classes, the unemployment rate is very low. The economy is booming. However, the rates are high. It's a bit of a strange situation. There is a new president, as we know. There's a new administration in the White House. They have a very aggressive agenda when it comes to economic reform. They've recently introduced the One Big Beautiful Bill, which is a tax bill, and they're focusing heavily on FDI, foreign direct investment, and bringing jobs back into the United States. New data that came out a little over a week ago suggests that inflation is finally, the tariff inflation is finally sinking in, and the job data is weaker than they expected, which may be the thing that we need at this point, which is the relief that we're looking for, which means that the Fed may lower rates, possibly, but we're not banking on that. Okay, we're not banking on that because our offerings are meant to perform regardless, and we'll talk about that in a moment. This is some CMBS data, something very interesting that I saw. It's from a research company called TREP, which does a lot of publishing of insights and research data. So these are the different asset classes in commercial real estate that are prevalent. You have office, you have industrial, you have lodging, which is hospitality and hotels. You have multifamily, you have office, and you have retail. CMBS is the commercial mortgage-backed security program loan. So these are non-recourse loans. It's a quasi-government organization or program, CMBS, which allows people to take out commercial real estate loans based on the asset income itself, and there's no recourse, there's no personal guarantee required. So during COVID, a lot of people took out these non-recourse loans, to refinance their commercial real estate at low rates, high valuations. But now those, some of them are being delinquent, as you can see, which is a great thing for us because that means that there are deals that pop up once in a while. Not so much in hospitality, though. You'll see that right here, lodging, the yellow one. You'll see that it's actually trending down. The delinquency rate is trending down. So office delinquency is going up, which means there's a lot of good deals to be had in office because there is truly a distressed asset class right now. But office is kind of, so not office, sorry, lodging is trending down, so to speak. But it is what it is. That's why we're here today. Let's talk about why hospitality beats multifamily in 2025. If you are here today, if you're an accredited investor, sorry, my tongue always rolls when I say that word. If you're an accredited investor and you're here today, you've probably seen a lot of different offerings for other asset classes and other asset managers, fund managers that are, bringing opportunities, and probably a lot of them are multifamily guys. We believe hospitality beats multifamily in 2025 and other asset classes as well. Okay, so number one, leisure and bleisure. Bleisure is the, business leisure is really high, right? Americans are traveling more than ever, and work from home flexibility allows them to travel more and, work while they're traveling from resort or from hotel. And of course, for business reasons, when the economy is booming, people are traveling for looking for business opportunities, etc. Okay, extended stay and select service hotels are outperforming full service. So that's another very interesting thing because they have leaner operations. So, full service hotel is something like a Marriott or a Sheraton or a Westin, which has restaurants and food and beverage and, 5-star, for example. And extended stay are the 3-star hotels like the Aloft, which we're talking about right now, and then the Hampton Inn, etc. As a matter of fact, I read an article recently that states that Hilton's most profitable brand is not Hilton or the Waldorf Astoria or the Conrad. It's actually the Hampton Inn, the extended stay brand. Okay, so that's why we're in this business because these are profitable operations, profitable businesses. Institutional capital is flowing in. In 2024, institutional investment in hospitality assets grew 14% year over year, which is interesting. When Wall Street is getting involved in something, you know that things are going well for that industry or that asset class. So a lot of institutional capital is flooding in, which tells us that this is a great asset class and it's resilient and it's backed by demand even on Wall Street. And last but not least, higher cap rates. How hotels, while they are considered real estate and they're underwritten like real estate, they're not so much only real estate. They're businesses, right? They're small businesses. They're franchised businesses with flags, right? Marriott, Hilton, Hyatt flags. So what that means is because there's some operational expertise required to run a hotel, um, they generally have a higher yield compared to an apartment or an office or a retail or industrial. So that means that there's more money to be made in multifamily and, there's better cap rates. Why is hospitality the best investment in 2025? Number one, cash flow. Number two, appreciation. It grows in value. Number one, let's go back. Cash flow. It cash flows from day one. We're not buying anything that requires land banking or development or construction. We are only acquiring hotels that are cash flowing from day one. Okay. Number two, appreciation. When something goes up in value, it's generally tied to the income. So if we can buy something and run it better and increase the net operating income, that also means that the value of that hotel goes up as well. Number three, recession resilience. Okay. What that means is we have these types of assets, they perform well in good economies and bad economies because people have to travel. There's corporate accounts as well, and there's all types of reasons why they perform well. And as a matter of fact, our hotel portfolio performed really well during COVID, because of they were really high occupancy because corporate clients, traveling nurses, the National Guard, etc. Last but not least, the reason why hospitality is the best investment in 2025 is because of the lifestyle benefits that comes with it. Our investors enjoy superb discounts when they travel. So imagine you're traveling anywhere in the world. There's over 10,000 Bonvoy properties around the world. You could be traveling and taking advantage of the amazing discounts, up to 70, 80% off, which I'll show you momentarily. That's the best part, actually. There's a lot of people that invest only for that. Okay. So what makes us unique and why we're here today? We are a company with a proven track record. Between the founders, we have over 50 years in combined experience. A lot more than 50 years. That's a very conservative number. We have a current portfolio of assets under management of 100 million plus. We have 3 hotels currently. One of them is a Marriott brand. One of them is a IHG brand, and the third one is being converted into a Hyatt Suites. So it's a Hyatt brand. And then number 2, proven strategy. We have a very proven conservative strategy that works for us. Okay. We're not, like I said, we're buying hotels that are operational on day one. Okay. We have a cash flow first approach. meaning our goal is if we're raising money for something, we want to pay our investors a distribution in the first quarter. And the hotels allow us to do that. This Aloft Hotel, which we'll talk about in a moment, is operating currently. It did $4.2 million in revenue last year, and it's projected to do a higher number this year. So that's a proven strategy that works. Number three, investor first approach. We have a very compliant and above board structured. We're a regulated fund. We're set up as a fund. We've all gone through extensive background checks, etc. But what makes us unique is that we pay our investors first through the pref distributions. So our performance, our pay is tied to the distributions that our investors get. And there are no fees of any kind in our fund, which we'll talk about in a second, in our product, in our acquisition. We only make money if our investors make money. Number four, innovation driven. So we are disruptors in the market. The way we're structuring our products and the type of benefits that we're providing, we believe we are the most innovative company out there doing this. And other people are not really, doing what we're doing, which you'll see in a moment. This is our leadership team. So our CEO is Kuldip Gyani, and then we have a chief medical officer, Dr. Pareen Shah, and then last but not least, I am Raza Khan, chief investment officer, and of course we have a chief medical officer. People ask that, why do we have that? It's because half of our portfolio is consisting of healthcare assets, including 2 freestanding ERs that are currently operational in South Texas, another one on the way in a town called Brownsville. And then we have some other medical related businesses or practices. One of them is an end-of-life care company. One of them is a diagnostic lab, which is being built. Another one is a performance, like lifestyle performance spa, etc. Okay. And if you're interested in to learn more about us and our team, please schedule a call with me directly, and I'll be happy to walk you through this. I'm just gonna skip past these slides really quickly. As I mentioned, our portfolio is half of it is healthcare, half of it is hospitality. We are located in Texas. We love Texas, primarily South Texas, but within the Texas Triangle, if other deals pop up, we do expand ourselves sometimes, within Dallas and Austin area. But we are south of Austin primarily, including San Antonio and then other towns like Laredo, McAllen, and Brownsville. This is what our portfolio currently looks like. So we have the Laredo Emergency Room, which is a freestanding ER, does really well. One of the highest performing freestanding ERs in South Texas. We have the Staybridge Suites by IHG in Laredo. This is a prime example of when things go right and when things are run right in hospitality. This hotel does an average occupancy of over 95%, because half of it is taken up by the National Guard. And those are the types of tactics that we and strategies that we try to employ in our asset management. And then we have a Courtyard by Marriott at the SeaWorld here in San Antonio. Some other interesting real estate assets and other assets as well. Okay, let's talk about the opportunity. So currently we are raising money to acquire a hotel, a very nice 141 room hotel built in 2009. It's a Aloft brand, which is a budget version of the W, very hip, very trendy, very modern, located at the San Antonio airport, close to the San Antonio airport, about 5 minutes away. And it's a great opportunity for all the hotel experts out there. We're getting this hotel under, we have it under contract for $10.5 million. If you know hospitality well, you would know that this is well within the replacement cost, about 30 to 40% below replacement cost. If we were to build this brand new, it would cost at least 15-16 million bucks. And then we're raising some other reserves, about $4.5 million for a PIP. What's a property improvement plan? This is something that's required to update the hotel in the next 3 years. Operational reserves of $750,000. Legals and closing costs, franchise fee. The interesting thing about this opportunity that makes us even more conservative and more risk averse is that we are not raising any debt. We're not borrowing any money from the bank. We're not using a mortgage. So this is going to be 100% equity funded, which our investors love because they are the highest position holder in the asset. 100% equity, no debt of any kind. It's located in San Antonio. So San Antonio is a city that's often overlooked by other big cities in Texas, like Austin, Dallas, Houston, etc. San Antonio, people don't realize, is the seventh largest city in the United States. Okay. And it is the largest military city in the country. It has 5 major military bases, and it is the primary hub for the Air Force. So it's a great town. There's a lot of demand. That's one of our criterias, being located next to the demand driver. This hotel is next to the San Antonio airport, which is going through a $2 billion expansion currently. There's a brand new terminal and they're modernizing everything. They're building everything from scratch. And it already sees about, a volume of 11 million passengers annually. So that's one of our criteria is being next to a demand driver. And that's what makes this an excellent opportunity for acquisition. Okay. So we have 2 options. One of the things that we like to do is obviously improve and give our investors ultimate value. We have 2 investment options. So there are 2 types of people: those that want to park their money for 2 years, and then there are those that want a long-term ownership in the asset. So we've created 2 options that are flexible and they're suitable for the 2 types of people. The number one is a 5-year growth fund. This is a traditional equity investment where you get distributions and you get profit sharing anytime there's a liquidity event within the 5-year horizon. If we sell the hotel in year 5, or we refinance it, or we buy out the investors, for example, the investors get their distribution, which is 8 to 10%, 8% pref or 10% preferred distribution, depending on how much they invest. Plus they get a profit share, okay? Which makes their effective internal rate of return, the IRR, between 13 to 17%. And then the second option is a very simple income note. It's a 2-year option. And there's a 10% payment, 10% distribution or coupon payment paid on a quarterly basis. Both distributions are paid on a quarterly basis, okay? Of course, you may notice that the internal rate of return is not as high as some of these other opportunities that are out there, but it's appropriate for the risk, for the low risk. Because we're not building anything, we're not buying a piece of land and turning it into a building and then stabilizing it and leasing it out. We are acquiring an operational hotel and we're using no bank financing, and it's a very conservative strategy. Okay. So there's 2 options. Like I said, minimum investment is 50,000, but any investor that invests more than 100,000, they get the hotel owner discount, the MMP rate with the Bonvoy program, which we'll talk about in a moment. Let's get into it now. So this is one of the most exciting things about being in hotel ownership or hotel investing. And I'm not sure how many other fund managers are doing this, but we are extending this as a perk for our investors. As you can see, this is a sample of what that discount looks like. So this is a property that we're looking at under the Bonvoy program in California, Laguna Beach. It's called the Ritz-Carlton Laguna Niguel. Absolutely beautiful property. I've been there also, overlooking the Pacific Ocean. Just amazing. Very luxurious. On average, this hotel, and these numbers were pulled very recently, as you can see, September 2nd to 3rd, which passed. The rate was 1172. The standard rate was 1172. With the discount, it comes up to 281. All right. So it's 1/4, a little more than 1/4. So really, really, really nice, discount. And then we have another example here, which is a W Hotel in Times Square in New York. The standard rate is $453. And then after the discount is $257. Okay. As you can see, if you're a frequent traveler, this discount is not factored into the IRR. It's completely separate because some people travel a little, some people travel a lot. All right. So as you can see, it's very, it's just amazing. This is an amazing benefit. And then here we have another property in London, County Hall, Marriott. Generally, it's about 542 pounds per night. With the discount, it's 133 pounds per night. Same room, deluxe room, guest room, one king bed. Okay. So that alone is an amazing benefit of investing. And it's not factored into the internal rate of return. If it was, if you're a frequent traveler and you're spending, if you're doing 50 nights, for example, a year, I think your IRR would be more than double effectively. So how does it work? Very simple. Everything is done through our self-directed portal. And we are, like I said, registered as a 506c Reg D fund, meaning it's only for accredited investors. If you want to know if you meet that criteria, it's very simple. Individual income of 200,000 or household income of 300,000, including your spouse, net worth of at least $1 million, not including your primary residence. Okay. You can invest as cash or you can use your IRA account. And recently, there's a new legislation that you can also use your 401k as well. The steps are very simple. After this call, I'm going to leave my calendar link. I'm going to spell out my calendar link and I'll drop it in the chat as well. It's very simple. Discovery.qilacapital.com. Discovery, DISCOVERY.QILACAPITAL.com. That's my direct calendar. Schedule a call with me if you want to learn more, if you want to see more information about what we're doing and what our plan is. If you want to get into the numbers and you want me to walk through the due diligence of the deal with you, I'll be happy to do that. But most people don't like that. They just want to know how much they'll get paid, which is why we do these webinars short and sweet. We try to keep it within 30 minutes. Okay. And once you've reviewed the information we send you, you just sign up. We send you an invite for our portal. You sign up and you verify that you're an accredited investor. You review the documents, the fund documents, you sign the fund documents, then you wire the funds. That's it. It's as simple as that. That is it for the presentation. At this point, I will open the floor for any questions that people may have. So if you have a question, please drop it in the Q&A. There's a button at the very bottom, and I apologize for there's a little bit of a glare happening right now. There you go. I'm going to move this a little bit. Here we go. So if you have a question, if you can please drop it in the Q&A below or raise your hand, and I'll be happy to answer it. I think we're doing okay for time. It's about 10:28 right now. So please go ahead if you have any questions. And if you don't, then no problem. We can schedule a call with me and we can talk about it in person, or you can email me as well. I'll drop my email and my calendar link in the chat below. There we go. We just dropped it in the chat below. So we have a question about the benefits. So let me read it out. Is there a cap to the benefit ownership or the benefits? Can I use it multiple times in a year, or am I limited? Okay. Yes, there is no cap. That's the best part. So if you're a frequent traveler and you do 50 nights or 60 nights, 70 nights, no problem. Bonvoy, the Marriott Bonvoy program requires verification that you are entitled to the MMP rate, which means that we have to issue you a letter. And when you're checking into the hotel, you have to have that letter with you. So we'll be happy to provide that to you. There is a designated line, an email address, and a person that deals with these requests in our team. Her name is Priti, and Priti is very helpful, and she's a frequent traveler herself. So she makes lifestyle recommendations and She's the point of contact for those letters. Every time you're traveling, before you book your stay, you just have to reach out to us and we'll issue you a letter and you can use it as many times as you like. Now, we recently found out that if you're traveling with a big group, like let's say you're traveling with your family and kids, and you need one room is not going to cut it, then you are able to book 2 rooms in the same stay. So that's another thing I want to add in there as well. Okay. Any other questions? So we have one more question. How does the self-directed, the IRA work? How can I invest? Okay. So, good question. It's very simple. If you have a self-directed IRA account with your custodian, let's say you're with a big custodian like a IRA Club or Fidelity, for example, or there's another one that's really well known. Anyway, it doesn't matter. If you are with an IRA custodian already, it's very simple. If you have a self-directed IRA account, all you have to do is take the fund documents and the wiring instructions to your custodian, show it to them, and for compliance reasons, they look at it and make sure it's not a scam, and then they sign off and they wire the money, and then the IRA is effectively the account holder in the investment. Some people go for the second option, which is they have an IRA LLC, a self-directed IRA LLC, which gives you checkbook control. And if you have one of those IRA LLCs, then it's even easier because the LLC is effectively the investor in the fund, and you would be doing the due diligence and signing off on behalf of the LLC as the managing member. So that's another way you could do it. Okay, any other questions? We have a question. If the investment is in my name, can my wife traveling alone be able to use the benefit? Yes, she can. Just reach out to us and we will issue you a letter and we'll make it happen. There's 2 ways you could do that. You could either do it under your own name and add her as a guest. And then if she's added as a guest in your room, she can check in without you. You don't have to be there and she can use the room. Or you can reach out to us and we'll issue a letter under her name, and ensure that she is able to use that benefit. Okay. Any other questions? Okay. I believe there are no other questions at this time. And just to be respectful of everybody's time, it is 10:33 p.m. a.m. And thank you for joining on a Saturday morning. I hope you have a lovely day and a lovely weekend. And again, if you would like to schedule a call with me directly, please do so, and I'd be happy to talk with you. And I love talking to new people and investors and hearing everybody's story and sharing our vision. And I love what I do, so I love talking to people. So if you are able to do that, please go ahead, and I will conclude this webinar at this time. Thank you so much for dialing in and making time, and I hope you have a lovely weekend, and we hope to see you soon. Have a good one. Bye-bye.